Imagine you're running a business. You're getting customers, selling products or services. But do you really know how much money you're making? Or maybe, how much you're spending? In today's video, we'll uncover the secrets behind the income statement, one of the most important documents that tell you exactly where you stand financially. Stick around, because by the end of this, you'll know exactly how to read the numbers that drive businesses. And trust me, it's more exciting than you might think. Let's recap the income statement, what it is and why we need it. The income statement is one of the essential financial documents in the world of accounting. It's like a financial report card for a company. It tells us how much revenue the company earned, what expenses it incurred to earn that revenue, and ultimately, whether it made a profit or a loss. Why do we need it? Think about it. If you're an investor, you want to know if the company is actually earning more than it's spending. If you're a manager, you want to know whether your team is doing well and what areas need improvement. Without the income statement, you'd be flying blind. The income statement helps you track the company's revenues, subtract out the expenses, and get the final result, net income, or, the company's bottom line. Whether you're a small startup or a massive corporation, knowing how to interpret an income statement is key to understanding if you're really making money. So, what's on the agenda today? We're working through the numbers of Skyline Tours, a company that provides guided outdoor tours for adventurers. In the summer, it caters to campers, and in the winter, it offers snowshoeing. Let's break down the problem, categorize the accounts, and get our hands dirty with preparing an income statement. The question says, Skyline Tours has the following account balances as of December 31st, 2024, and for the year then ended, unless otherwise noted. Here's what they've got. The company didn't issue or repurchase any common shares during the year, but we're still going to dive into the rest of the numbers and figure out how profitable Skyline Tours was in 2024. So, in this video, we'll focus on preparing the income statement. We'll identify the relevant accounts and go through the process step by step. Before we dive into preparing the income statement, let's first identify the relevant accounts. We need to determine whether each account is an asset, liability, shareholders' equity, revenue, or expense. If it's an asset or liability, we also need to determine if it's current or long-term. So, let's quickly recap the difference between current and long-term accounts. Current assets. These are assets that the company expects to convert to cash, sell, or consume within 1 year. Examples include cash, accounts receivable, and office supplies. Long-term assets. These are assets that will provide economic benefit beyond the next year. For example, buildings and equipment that the company will use for several years. Current liabilities. These are obligations the company expects to settle within 1 year, such as accounts payable or wages payable. Long-term liabilities. These are debts the company will need to pay after 1 year, such as a bank loan. Let's go through the accounts in the problem and categorize them. Wages payable. This is a liability, and it's current, less than a year. Dividends. These are just dividends. They're their own thing and don't belong to revenue or expense. Cash. This is an asset, and it's a current asset because it's immediately available for use. Common shares. This is a shareholder's equity account. Accounts payable. This is a liability and it's current. It represents amounts the company owes that are due within the year. Buildings. This is an asset, and it's a long-term asset. The term net means it's the value of the building after accounting for depreciation. Tour revenue. This is revenue, which contributes to the company's earnings. Fuel expense. This is an expense related to the operation of the business. Depreciation expense. This is an expense. It accounts for the reduction in value of long-term assets over time. Insurance expense. This is an expense. Telephone expense. This is an expense. Equipment, net. This is an asset, and it's a long-term asset. Bank loan. This is a long-term liability. Retained earnings. This is a shareholder's equity account. Accounts receivable. This is an asset, and it's current. It's money the company is owed, which should be collected within the year. Office supplies. This is a current asset, as they'll be used within the year. Wages expense. This is an expense. Utilities expense. This is an expense. Now that we've identified the relevant accounts, let's focus on preparing the income statement. We only need the revenues and expenses for the income statement, so we'll highlight those accounts. For the revenue section, tour revenue, $180,000. For the expense section, fuel expense, $12,500. Depreciation expense, $3,000. Insurance expense, $6,000. Telephone expense, $300. Wages expense, $35,000. Utilities expense, $1,500. Next, let's add up the expenses. $12,500 plus $3,000 plus $6,000 plus $300 plus $35,000 plus $1,500 equals $58,300. Now let's calculate the net income. Net income equals revenue minus expenses. Net income equals $180,000 minus $58,300 equals $121,700. Now, we have our net income, $121,700. This means that after all expenses, Skyline Tours made a profit of $121,700 in 2024. Now that we have all our numbers, it's time to make it look professional. Here's how we present it. Tour revenue, $180,000. Total expenses, $58,300. Net income, $121,700. Don't forget the important formatting rules, $signs at the top of each column and double underlines at the bottom next to the net income. So, what did we learn? Skyline Tours made a net income of $121,700. But what does this really mean? Is it good or bad? Well, if last year they made $100,000, then $121,700 is a solid improvement. But if they made $300,000 last year, then this might be a decline. The truth is, without comparison to past performance, it's hard to say for sure if this is a great result. But hey, at least it's profit, and that's always a good thing. That's it for today's deep dive into the income statement. In the next video, we'll move on to preparing the statement of changes in equity. So, make sure you're subscribed and stay tuned for the next part of the series.